about that.
There he
Hello,
is.
Steve. Yes.
Yes. All
Hello,
right.
Scott, and hello, everybody else.
All right. So yeah, here we are again. We were here just 24 hours ago doing the office hours for Jamie yesterday, but today's a new day, and boy, we have a little bit of changes in the wind perhaps to talk about today. So definitely some things to talk about. So thanks for showing up for the trade of the week. Typically the focus of this webinar is to go over the trade of the week call in addition to what we normally do, show some features, talk about the market, talk about the artificial intelligence performance of the day, and towards the end, hopefully we can get to some questions, and let's get started. All right, so first slide as usual, the commonly attended people have seen this slide and know what I'm about to say, but I have to say it. We are a software as a service provider. We are content providers. We should not be construed as giving out investment advice. If you're looking for financial advice, you got to go to the right people who took all the tests and have the brokerage licenses and the RIAs and that type of people. So please don't consider anything that you see or hear in here as investment advice. We're here to just have a little fun, talk about the technology, and talk about the way Andy and I are kind of seeing the markets. And we did have some interesting action today, which we will get to. So those of you who took the poll and mentioned to Scott that you're not a subscriber, excuse me, I would just like to remind you that one of the things we pride ourselves on is the onboarding and the concierge level that we give people when they sign up for at least 1 month. Right off the bat, what you don't see on here is you get a one-on-one hour of training, which is dedicated to only you. It's not a group forum, it's just you and us. And we share our screen, drop in some alerts into your cloud that you might like that you see on our screen, maybe show you how to build something of interest that you've been trying to build, and just go over what you want to go over to put yourself in the right direction. Because as we all know or should know, trading is not a science. It's not a step-by-step program. It is an art form. And everybody has different risk reward tolerances and second jobs, emotional differences. Some people like slow moving swing trading. Some people like the fast moving musical chairs stuff that Ross Cameron does in his room. So the one-on-one is a great way for you to get custom tailored advice and get you going in the right direction using our very comprehensive platform, Trade Ideas. Additionally, we do have the webinars 4 days a week, Monday, Tuesday, Wednesday, Thursday, all starting at 5 p.m. Eastern, just like today. Yesterday, as you could see, was office hours. Today is the trade of the week, which is not shown here. Tomorrow, or typically on Wednesdays, we have a question and answer demo with our Chief Operating Officer and Chief Executive Officer, Dan Merkin and Brad, and they spend time kind of showing you on what's coming up on the horizon. However, this week, we don't have that. It'll return next Wednesday for the Q&A webinar. And then it's Andy's turn on Thursday to host with Jamie riding shotgun, once again, give an hour of content, kind of talk about what happened throughout the day. And then our newest feature was one of the best decisions we've made this year was to open up a 3-hour open support forum for technical support or any questions you guys might have. You know, the one-on-one session that I mentioned earlier, when you sign up for, there may be a 10 or 12 day lag time, but that gives you a lot of time to kind of use the software, get your hands dirty a little bit, create some of your own questions. But in the meantime, that's what the Friday support session is all about. Pull up a chair and same format with this GoToWebinar, use the questions panel, and we demonstrate things for you every Friday for 3 hours between 11 and 2 p.m. So if you're not on that email list, or if you're not on our email list in general, I would imagine you would be, or otherwise you wouldn't be here. But just make an effort to remember Thursday evening and Friday mornings, you're going to get an email that's going to remind you how to log in for the Friday support sessions, which we do every single Friday. And then lastly, every single day of the week is this slide right here, the live trading room. It's free, so there's no charge. There's hundreds of people in there watching Barry Anderson trade his own account using Trade Ideas technology, answering questions, demonstrating ideas, talking about the AI. And as a bonus, we got a handful of some really experienced traders in there that are good at calling out other things that they're seeing in real time. So not only is it just the Trade Ideas room. It is a trading room in general, and you'll see ideas in there that everybody's talking about. So great deal. Free is a great price. Can't argue with that. And then here's a graph just kind of supporting what I've been saying. You know, our subscriber growth is going absolutely parabolic as we start to hit the radar screen of the industry. And a lot of that is due to the product itself, but of course, I think the support that we've given, and you can see this arrow is basically when the AI was introduced, and we haven't looked back since. Real quickly, there is a product. It's not for beginners. It's more for advanced intermediates. If you have your own custom scans and trade strategies using trade idea alert windows, and you have an IB brokerage account, and if you're interested in auto trading or robot trading or bot trading, whatever you want to call it, we have the ability to hook you up to your Interactive Brokers account using what we call Brokerage Plus. And it's still in beta form, but hopefully in a few weeks it'll come out of beta and become a legitimate product. But for now, it's still in beta. And if you want more information on it, trade-ideas.com/download can get you some more information on it. But I really want to, mention that we're not going to talk about this kind of stuff today. This is very much advanced, and it's not for everybody. It's definitely not for new traders. You need to learn how to walk, crawl, then walk. And then when you get to this, this is basically learning how to run. So Brokerage Plus. Came across this slide from a good friend of mine, Brian Shannon at alphatrends.net, and he's quoting one of the best traders of our time, Paul Tudor Jones. And it's a great segue into the theme that we've been really harping on with trade ideas for a while now, and I'll just read it. No man is better than a machine, and no machine is better than a man with a machine. What does that really mean? It kind of means what we've been talking about, is that our technology, our platform, and our artificial intelligence are not an end-all, be-all, red light, green light, just follow it blindly. It's a tool and it's a machine, but still needs to be used in a discretionary form with the human being. So it's man plus machine, or man and machine, as you want to call it. But this Paul Tudor Jones quote really rang true the moment I saw that, and that's really what we're talking about here, is using the technology and the machine and trying to take the fire hose of data that is our market that comes at us every day, and really try and slow things down to garden hose trickle and bring things into a more manageable frame of mind, so we're not chasing our tails and chasing 57 different strategies and alerts. We as traders want to find what works best for us and hone in on a method, and then continually try and simplify that method. Agenda today, we've got a lot to talk about, I think, on some of the market recap action we saw today. I think some caution flags were thrown up. Very different from the discussion we had yesterday when we looked at the market recap. We'll take a look at how the AI navigated today's market, and we'll take a look at the trade of the week, BRS, which started off with euphoria, but now is in risk management mode. We'll talk a lot more specifically about that. We'll take a look at the sector analysis, try and get a flavor for maybe where some of these sectors might be headed. And time permitting, we can do some questions and answers, either chart requests or feature requests from trade ideas. All right, so let's park that, and welcome to my desktop here.
And before you bring that up,
Sure.
Steve, yeah, I want to address Mark had a comment on here. It says almost 3 weeks wait for one-on-one sessions right now, and that is true. Sometimes we have, when we have the test drives, we have to block off all those days to be for immediate support for the test drive. So that always sets us behind a little bit. We should get to the normal, 10-day to 2-week time frame. But we provide you with so many resources, and now we have the 3-hour support session on Friday. It really gives you some time to get to know the product before you come into the one-on-one session, and it'll be that much more valuable to you. So I'm finding that people who watch the videos, watch our webinars, and come to that support session and spend a week or so really learning the product, and then by the time you get in those one-on-one sessions, you're going to find it being much more valuable than just coming in here and letting us show you how to build an alert.
Yeah, if you're on the wait list for a session, it should calm down back to, like Andy said, maybe 10 days to 2 weeks. But if you're not coming into those Friday sessions, you're kind of putting one hand tied behind your back to help you with your learning curve. So that's really the main reason, Mark. Your comment is one of the main reasons we created that 3-hour open forum session, to act as kind of a buffer between the time in which you purchased your software and start playing with it and get some questions and actually wind up with your one-on-one date. So thank you for clarifying that, Andy.
Mm-hmm.
Let's take a look here at the middle finger. Okay, this is the middle finger. The market just gave us a middle finger today. And if you were with us yesterday, we talked about how the Dow just had 9 or 10 days in a row, and the Dow gave, and I basically put this blue line in here yesterday as kind of an alert that if the blue line is broken to the downside, we could see some follow through and some pullback. Well, today we have a lot of topping tails, not only in the indexes, but in a lot of stocks as well. Just for funsies here, if I put up the SDSs, which is basically the inverse of what the S&Ps are, this looks like a lot like the washout bounce bottoming tail. And essentially that's what it could turn into. We don't know, but just trying to orient, your eyes to the long side. If you're somebody who wants to go short but can't go short because you're trading a self-directed IRA, or you don't have a margin account, or for whatever reason you don't want to short, you can still buy charts going from lower left to upper right if the market gets weak, and they're called inverse ETFs, and this is the inverse of the SPY. So when I put the SPY back on, it's just the exact opposite. So here's the topping tail of what happened today. So what did happen today? Well, we started off with a gap down, and I'll tell you what I've noticed, and Andy, you can chime in too. When we have days like a gap down day and then we buy the market back and go positive like this, Holly seems to have a lot of fun making some picks, as opposed to the days where the market gaps up. It seems like Holly doesn't really seem as comfortable chasing gap ups. But it was, the first half of the day was a beautiful day for setting up for the AI for a lot of the trades, and we'll get to that. But what happened midday? Well, we started to have some selling, and I normally don't like to attribute news, catalysts, or fundamental things outside of price action, but I'm going to go ahead and say we had a little bit of macro global news today. I think it's corroborated by a lot of people that I respect on Twitter, so I'm just going to go ahead and say it. Right about here today is when the president came out and started using very aggressive wording towards North Korea, and I don't think the market liked that. And the market had a pretty good run since then, especially in terms of the diamonds. So we could all argue that maybe we were just looking for a reason to sell off. But that seems to be the order of the day, what happened looking into it. Really nice opening, really nice first half of the day. And then we had a lot of talk, scorched earth type, verbiage being used by the president against North Korea, and that really spooked, I think, a lot of traders. But only one day, it's not enough to really tell. However, these candles that we're throwing up here, like I said, I'm calling them the middle finger candles. I've seen them before, and unless the market can recover and get back above, we could be in for some red flag cautionary wins here. Ideally, beautiful breakout to all-time high in the spiders today, but they failed to close above that level, and matter of fact, closed way below it. Not a pretty picture there. The Qs, pretty similar. Nice wick trying to head back to all-time highs, but couldn't get there, and then sold way back off. So tomorrow will tell. We'll see if there's any follow through tomorrow. IWM was even starting to show up as the third leading sector in the morning as we got rolling, but then I believe the macro news kind of threw that one back down as well. So really across the board, there's just not a whole lot to get excited about after what we had today. I mean, a lot of people would look at this right off the bat and say, hey, that's a topping tail. And it may very well be. We'll see what tomorrow brings. But in my world, I put this line in here yesterday. For those of you who attended yesterday's webinar, you saw the wisdom behind why I put that line right there. It's kind of a double bar reversal. And if we get movement and follow through below that, the winds could definitely start changing. Yeah, thank you. Just to add to that, David, you're correct. If you don't want to go long, if you don't want to short stocks, or you don't want to buy SDSs or buy inverse ETFs, you go to the options and buy puts. But that's a bit more advanced for some people. So, you know, not a good day. I mean, it was very much an intraday reversal, but we don't really know what's going to happen until we get to tomorrow. So there's really nothing showing leadership at the moment. All four indexes got really spooked with that news that came out midday. And this pretty much, this TP, Andy and I used to call these TPs. It's pretty much just what an intraday reversal is going to look like. And there's our S&P TP. We have to pay attention to these guys. We can't treat these lightly. So I'm raising a red caution flag here today to be very careful. I'll tell you what I wouldn't mind seeing at all is I would not mind seeing Holly come out with maybe more than one short strategy tomorrow, because today everything's going to go back into the hopper and all the back testing is going to occur again, and we're going to have today's very negative candles and very negative data. I would like to see maybe an even mix tomorrow of long strategies that made the cut and short strategies that made the cut, because if we do go down, we need a few short strategies in the hopper to hopefully participate. So that's the market recap. Anything you want to add, Andy?
Yeah, I agree. I thought I even made a comment to you today, Steve, as the market just kept grinding, not really grinding, just kind of pushing higher, once again on low volume. And I was looking at my sectors, and I'm looking like, gosh, there's no real leadership. And the KRE was doing okay around, you know, after the first couple of hours in the morning, but gosh, I just could not see any real big leadership. If you click on the KRE there, Steve, you'll see the intraday action in that one. KWeb was kind of a gap up, but yeah, it was kind of, it was the biggest leader on the board when I looked at it, but everything else was just kind of like blah, and I'm going, gosh, is this a case of the tail wagging the dog? You know, in other words, people just buying, once again, passive index funds, buying spiders, you know, iShares, whatever, you know, because, but I just really could not see the enthusiasm in the individual stocks like I did yesterday, today, even though they had that runoff. So it doesn't surprise me, the fragility we had at midday in the market to sell off pretty hard, because I just didn't think there was a whole lot to this drive we had this morning. Time will tell. I think Steve's right. There was definitely some caution flags, but it just really felt like a tired push higher today.
So as it were, at the end of the day, the defensive stuff starts to creep towards the highs. Gold and silver starts to creep up here. But we shall come back to that, those sectors, and maybe take a look. So let's move on to Holly. Now I want to highlight, we had a bug again today. Sometimes this shows up, and I showed the developers, they're on it, but the risk on basically kind of flipped on the histogram, and it doesn't really look what it looked like today. What the histogram looked like today was basically the TP in a lot of the stocks we had. So going into midday, risk on was really cranking. I think at one time it was up almost $4 or $5. And then as the sell-off occurs, well, risk on means that we're staying in the risk position until the end of the day. A lot of that money was taken all the way back. So I just don't think we can emphasize enough how much intraday reversals like this can play out moving forward. But we won't know until the next day or two and see where we go. All right, so let's move into Holly. Again, it would have been nice to, I really wanted to show you the histogram. It was a roller coaster up and a roller coaster back down, just like the markets did, which gives you an idea of how risk on really does follow the general backdrop of the market. So sorry, apologize for that glitch. It'll be fixed tomorrow. But either way, risk on or risk off by the end of the day outperformed the market for sure, up $1 on each. But let's take a look at maybe a couple of trades that came through today. Let's see, I'll just sort by risk on here. And one of the first ones I'm going to start with, and then I'll turn it over to Andy, was Pod. Okay, people say, you know, this looks like just a bunch of day trading ideas. Well, I would have never seen this stock, Pod, had it not been called out by Holly today. Real quick, Holly took 25 cents, and then the profit save, which is what we used terminology as trailing stop is probably more familiar. Trailing stop got Holly out for a 25-cent winner. By the end of the day, though, it was only up 5 cents. But what's interesting to me, some of you have heard me talk about horseshoe patterns that I coined. That's when a stock gaps up, can't fill the gap, kind of trades around, and then moves back to new highs. Well, that's a fractal pattern. That can happen on a 5-minute chart, and it can also happen on a daily chart. And when we see these on daily charts, these are the kind of things that swing traders should really be paying attention to. Now, there's no guarantee that the market is going to cooperate tomorrow to maybe help push pod higher, but pod now has my interest as a possible swing trade. So I'm going to go to the height of that wick right there, and I'm just going to use a price alert to remind me that this was a Holly call, and it's doing a horseshoe on the daily chart. And that's my reasoning for just setting and forgetting PODD as a possible swing trade. You know, if the market recovers tomorrow and everything goes back to the way it was before, then so be it. This thing could move back in a higher direction. But I did want to highlight and imprint on you guys that even intraday 15-minute candles, you know, this is the horseshoe alert that I like to use, but it also can work on daily candles. It's just up to you to identify it with your eyes. So that was one of the trades that stuck out to me for the most part. What would you like to talk about on today's Holly extravaganza?
All right, Steve. Do you want to let me do it, or just kind of go off your screen?
Just go off mine. Yeah, just go off
okay.
mine.
Yeah. If you don't mind, just sort by risk on, if you would. And let's talk about. And I'm not just grabbing the best ones here. I just want to show you guys. You know, it's all about risk management. And when we talk about risk on and risk off, basically that's kind of all we're talking about is risk management. Because I can sit here and talk about the top 3 charts, which were beautiful trades and were basically no pain trades, which means you could have entered these and really didn't experience any pain at all. There's Steve showing you EFII. You can see where the alert went off at Holly around the 2957 area, and yeah, just look at that. You had is that a 5-minute or 15-minute? It's 5-minute, right?
15. Nope, it's 15.
Look at that. Look at those 15-minute bars without a bar reversal. That is what you call just pretty much you know, painless, just just a beautiful trade. I mean, the daily, yeah, it had a big sell-off, but you see it cleared that level as Holly entered it, that 3-day high there. So you kind of have a big gap there. I'm not saying it's going to fill that gap, but you really had a lot of open air there. Let's move down to the next one, Steve, which is take 2. And once again,
Weight Watchers or
Weight Watchers? No, Weight Watchers.
Okay.
Okay. Once again, you had an entry. Holly, you know, she took her let's see, what is it? 25 cents on profit save. And yet the stock just continued to grind higher. You can see where she got out right there where the darker shades turns into a lighter shade, and the stock just continued to just kind of push higher with never any pain. In other words, never going below the entry price. Okay. The next one, take 2. I'm not going to sit here and dissect, you know, how you should trade each second in these things, but once again, another beautiful entry, no pain. It kind of dipped down maybe a little bit below that 91.01, but not very much, and then just recovered and pushed higher for, you know, a nice little, another, what, like a 40 cent run there in take 2. And guys, the reason I show you these, and because I know one could argue, okay, Andy, what about Teva, and what about if you want to go down to the bottom too, Steve? And fair question, you know, what about Teva? Well, it's all about risk management. And when we show you these good trades and the possibility, you know, of how you can stay in these things for longer and let them work for you, I don't want to discount the fact that just as important is, you know, to when the other ones fail, you know, and a stop is hit, or you know, in the case of VSAR, that's a time stop. But once again, you're just managing risk, and that's what you do as a trader. Okay, you have to learn to cut the ones that aren't working and let the ones that are working work for you. And that's why we like to give you risk on and risk off. It's not so we can say, oh yeah, you should have held this one all day. No, I know not every trader's that way, but if you can get into a habit of letting these things work for you when they're working for you, if there's no reason to get out. The market was doing very good the first 2 hours of the morning. And even though Holly may get out for a profit save, you got to evaluate the market conditions, the trade, the technicals, and learn to hold on to these things, you know, longer. And that's the reason we give you the risk on in the risk off. It's for your education and for your just becoming a more profitable trader, because it's all about managing risk. Once again, I can't stress the importance there.
Yeah, we will touch on that when we get to the trade of the week segment.
Mm-hmm.
Anything else in here that we?
Yeah. Well, I tell you what, there's probably. I mean, oh yeah. Let me. AA. Gosh, I almost forgot about this one. If you look, Holly called it out at 39.05. If you go back, I know everybody probably has my Extreme Volume High-Low Pro. You will see Alcoa coming through that Extreme Volume High-Low Pro today. So you have what's called double confirmation.
Mm-hmm.
You know you have a trade that's statistically weighted, okay, casino odds in your favor from our AI. And now you see it also coming through an explosive volume multi-strategy window. So, and once again, Holly got out for a time stop. So she got out only because she's optimized to get out after whatever amount of time, 1 hour, whatever it was. That is one, once again, very little pain at all. And it went back through the high of the day, and look at the run it had after that. So when you see it coming through, Holly, and then you see it coming through some of your other alerts that are looking for, technical momentum trades, oh man, that adds so much weight. So I'm glad you asked me, is there any more? Because I almost forgot about that Alcoa. That was a beautiful one today.
Yeah, before we move on to the trade of the week, I'm sure there was a lot of people in the room yesterday for the webinar we did. And yesterday I gave out one and only one stock with a trigger price to watch. Does anybody remember what that stock may have been? If you do, type it into the old question box, because I only gave out one.
There you go.
There you go, Mika.
Mika, there you go.
Look at this right here.
Yeah.
Yep, I said SGY if I got above that trigger. We kind of hemmed and hawed about the figures that were being reported on the short float being over 100%, but it looks like people were not sticking around to argue that point. This thing was up 15% today, 18%, excuse me, and it's looking like it may even want to go higher. So, I don't like to give out a lot of ideas, but when I do and when they work, I like to point them out and point out why we liked it. Unfortunately, it makes for a difficult segue. We also found BRS to be the trade of the week that looked very similar at the top of our trend change lubricant window here, and we called BRS. So BRS is the trade of the week, and we had a little bit of tickling yesterday through highs and then pulled back and then just kind of rested near the highs from Friday. And there was a really nice euphoric move this morning on the open. The volumes were there. Trust me, I was watching my volumes. They were very high, very nice move. And then some selling started to come in, and then it just kind of caught wind of what was happening in the rest of the market. So we basically have a trade of the week that went from euphoria, delivering about 5% of the upside, to now being down back into the range. So what I'm going to suggest is, and why I'm going to suggest it, is that I'm not happy with this. This is not what we want. A lot of times, let's go down to Holly. A lot of times we talk about reduced risk. What is reduced risk? When Holly exits a trade, basically the AI is recognizing that the trade is not progressing as it had hoped, and rather than stick around and go all the way down to the suggested stop price, we're just going to fish or cut bait right now and cut it loose in terms of the reduced risk Holly's exits. Well, I'm going to suggest that we may need to go to a reduced risk, even though the technical alert for the downside is 695 on the stop. Let me zoom out a little bit so you can see a bit more. But in light of what happened today, I'm not happy about it. I'm not happy at all. We should have closed and stayed above our breakout point, and we didn't. So part of this could be due to the strong sellers, but a lot of it could also be due to the backdrop and what happened in the reversal of the market today. I hanker to guess a lot of stock charts probably look like that. So rather than waiting for the stop loss of 695, I'm going to suggest to some of you that maybe in this position, and I would be probably taking the same strategy here, is to use our handy dandy risk reward gradient that's in the chart here. I'm going to say that if you're a little concerned, like I am, on how there was no follow through and especially no close above the line that we wanted it to close above, we've dropped right back down into no man's land, which means we very well could easily go back down and visit the low end. So this is going to happen in position swing trading. You're going to get a move, and then it may not do exactly what you want, and then you have to go into risk management mode. So if you're a aggressive liberal stop user, you can just keep that stop in place. But hearing what I'm saying, I'm kind of going into reduce risk mode like the AI does. This trade is not panning out like SGY did. We don't have SGY as our trade of the week. We have BRS, so we have to deal with what we have. So what we have is now a situation of risk management. And I'm suggesting to some of you guys that maybe the 742 level right here that's being shown as the current smart stop based on the current price. This could be an easy exit and just, fish or cut bait, cut your losses early, and but you just have to live with yourself if it bounces back up and goes to highs. But I can't emphasize enough how disappointed I am in the way in which the stock closed today. So again, it's partly the stock and also partly the general backdrop of the market. So that's what I wanted to say about BRS. Again, the concept was trend change lubricant, looking for stocks that have been beaten up but have a high short float. In this case, the short float was 64%. We had a very low, not a very low, but an intermediate float of 31 million shares in circulation trading around, which can be helpful for short squeezes. But look at this long channel here, this long basing channel. And what I forgot to mention is this green candle right here was earnings day. Big volume spike. Earnings were surprised, even though they're still negative on the overall year. There was a 30-cent earnings per share surprise to the upside. So that kind of gave us fuel to rocket us up on Friday towards the high end of this range, which is a tight range and a base all in one. So, it is what it is. We had euphoria in the morning, and then everything kind of changed in the afternoon. So we got to go back into risk on mode. But this was the reason for the stock being selected. One more thing I want to add, again, why didn't we pick something like, something that's just been going up and up and up, like Weight Watchers or some sort of momentum stock? Because Weight Watchers isn't a great example today, but when we have stocks that have been trending higher and higher and higher, and we do get a downdraft, those stocks can tend to fall very quickly. So focusing on a trend change lubricant stock, which is a stock that's already pretty much had a bad downdraft, the downside's not going to be as risky if the market does fall out of bed. Mm-hmm. Can you share the trend change lubricant? Yes, I can. I know there was somebody in last night's webinar that we had to leave, that we didn't quite get to, but real quickly, let me just break it open and kind of show some of the people who are not familiar with how the filters use of what we're doing here. So the T window, the trend change lubricant window, is like a spreadsheet, and I've double-clicked the short float column to make sure that I see everything with a high short float rise to the top, and the column right next to it is the total shares in circulation. Oh, that makes sense. SGY only has 4 million shares in circulation. That might be one of the reasons it's doing what it's doing today, SGY. So what we're doing is we're looking for filters, and as long as all these filters are satisfied, it's going to show up on this list. And again, this is a list looking for stocks in a big downtrend that's basing and trying to move out, using the sorting of the short float to try and find the candidates up here near the top, which might have the most potential for squeeze. In this case, SGY did. In our case, BRS not so much. So quickly, the filters. You've got to have a stock, it's got to be up at least 0.5% from the close, and everything on here is up at least 0.5%. Dollar volume has to be 500,000, it appears. But here's where it gets interesting. This one right here, position and year range. We've got two position and ranges working here. So if we zoom out in our helicopter, the bigger one is the 52-week position and year range, where 0 equals the 52-week low and 100 equals the 52-week high. So what we're doing is we're capping or maximizing or suppressing using the maximum column here of 35%. So that means show me stocks where a 52-week range on the chart, the price is no more than 35% above its 52-week low. So this gives us the starting point of the ugly downtrend. But how do we find the trend change? The possibility of the trend price trend trying to change directions. Well, we use the second one, position in 20-day range. And as you would guess, same thing. 0 is a 20-day low and 100 equals a 20-day high. So we come over to the minimum side and really push it up high at a 90 percentile, meaning show me the stocks that are just 10% away or a small smidge away from breaking out of a new 20-day high. And then the short float minimum is 20%. So we would have a lot of stuff on here if it weren't for the short float 20%. So here's what we're trying to exploit. So once we have our top list configured, you know, throughout the day, I'm looking for ideas of possible trend changes. And there's another one for you that shows you it's been beaten up. Here's a great example, ACAI, kind of putting in a little head and shoulders bottom and moving back up, trying to break this kind of imaginary trend line I'll draw with my arrow there. But that's how we kind of, not fool the system, but ask the system to give us back what we're looking for, stocks that are basing and turning and making new highs. That's really the gist of it, with the high focus on which ones have the highest short float. And ideally, we get stocks like SGY in the bigger picture there. And look, isn't it interesting how we talk about look left? Once the stock breaks out, just like you're crossing the street, look left. Well, I drew this line yesterday before SGY even broke out. I said this could be the possible upside target. And look at the, I mean, look at that. Boom, boom, boom. That was just so right on. And there's really no other reason to say that that happened, because we got to look left. And looking left, that's where the sellers showed up last time. So there's your chart lesson for the day. If you haven't heard us talk about look left, that's why we do it. And so if you were lucky enough to maybe catch some of this ride, you should be wondering, where should I start selling? As you get close to this level, that's where you should start thinking about selling. Okay, enough of that. Where are we? Oh, the sectors. Let's just take a quick look at sectors here and see if anything is popping out. Silver, of course, was a defensive move. It had a nice day.
Hey, Steve, before we go into this, let's go ahead and pull up Siri, and I want to talk a little bit about Siri, because I think somebody asked me about that. I said I'd talk more about it in the webinar today.
Gladly.
Siri, what happened here with Siri? You could see after the earnings date, the big green volume bar, and the move higher. It put in a couple of days. Looked like it may have wanted to go and break out to the upside of that, and then we had kind of a downdraft for 2 days. Well, on that third day of the downdraft, it turns out Siri had news, and they did a debt offering. And that is kind of what happened. I don't know, I think a lot of people were expecting that, since their earnings are getting much better. Their churn rate is very, very low, surprisingly. So that's what we have in Siri. And today I was kind of hopeful, but because it finally did a bar reversal, and then it just got caught up in the market activity, you know, with the spiders and the whole market pretty much, you know, crashing the lows.
It's trying like crazy to hold on to that level, isn't it?
It is, and more than likely it wants to go test at 550, which is huge support, even going back to several months, you know, but you can see the support there, and I think there's some more. Yeah, there's a line up there. So you do have some good support there, and of course I think the stop is at below 545. I gave it a little wiggle room in case it broke that 550. But yeah, that's something I didn't want to give it all the way down to like 330. No, it should hold this support, the 550 support level. If not, I just don't have a whole lot of faith in it. But nonetheless, I felt good about that call. If you look at the long term, we don't have enough data on our dailies to go back, because I'm talking about looking back 10 years. So you'd have to go pull up you know, Yahoo Finance or freestockcharts.com. But anyway, it was like a 10-year base that it finally broke out of. So this could be one of those just slow movers. It has huge float share. So but the overall long-term picture looks good. Yeah.
Let's take a look at the actual float, just in case you guys haven't been aware of it. It's 4 billion.
4 billion. Oh yeah. It's got a lot of shares.
And you know, we're speculating maybe they were raising debt to try and buy Pandora, but that's just a broad speculation.
Oh yeah. They own about, I think, 16% of it anyway, but yeah, we'll see.
All right, so quickly, sectors, let's just go through them and see if anything catches my eye. Possible reverse bottom head and shoulders here in silver could be showing. I don't know, too early to tell. China definitely got ahead of itself. Big old doji today, so it's probably a bit extended there on the China stocks. Bank stocks, okay, just a pretty good mess. Not a whole lot to see there. Gold, once again, a nice bottoming tail. One of the things I've seen on gold is there's a very long-term trend that's come down, and these last two peaks right here and right here have basically popped above the downtrend and then coming back, and they keep fighting it. So if you got some longer-term charts on your own, go ahead and maybe look at a weekly, and you can kind of see that downtrending gold trend. And if we, I'll tell you what, I'm going to put an alert in right now because I just know my levels. If we break back above this level, pretty much right here in gold, the downtrend may be in trouble again. Trend line, I know exactly what that means, so that's why I'm writing that. All right, GDX is our gold miners, kind of messy, not as strong as the actual. KRE is going to be the same as the other one. KBE, excuse me. Natural gas, what a mess, just a, yeah. The junior gold miners, not a lot to write home about there. Okay, well, this is interesting. XLK, it's the tech spiders. So basically, we're kind of looking similar to what the Qs look like. Not a whole lot of difference. Diamonds, we looked at those. You guys saw that I put in this level in the diamonds right there about 220. You may want to do the same because if this wick, bottom wick gets broken and this little 2-day congestion here gets broken to the downside, on the heels of this giant topping wick, well, we could have some momentum to start filling these gaps down here. Treasuries, not seeing a whole lot there. Home builders, what are they doing? Whoops.
Today.
They tried, but you know, they're still strong, but for the most part, they had a nice rejection wick as well. Ooh, big rejection wick in the financials. Financials went to new highs today and then gave it all back and then some. Ugly. That's pretty ugly. Spiders, we've seen those. IWM, we saw that. Energy sector, not a whole lot to write home about there either. SMH is going to look a lot like the Qs do. Healthcare, what's healthcare doing? Just kind of sideways. Agriculture's had a nice move, but it's starting to pull back here as well. Maybe you could look for a possible area to dig in. Commercial real estate, right in the middle of its range, nothing going on. Steel was really strong yesterday, basically held its gap today. So I think this is one that could be interesting to keep an eye on. I'm going to mark this one up as well, SLX. SLX breakout. Doesn't look bad in terms of the market wants to hold up or not. And then we get into our ugly energy stocks here. Oil, kind of a flag there for the commodity of oil. Biotech, a lot of pulling back to support. Retail gave it all the way back on an open. Solars were doing well. They were doing really well. And then they had a nice, looks like just a, not quite an engulfing bar, but a nice reversal bar there as well. So we could see a bit of a pullback in solars. And boy, that was,
yeah, ugly.
Really nothing to say about that. All right, so those are our sectors. I think if I can recall, the only ones that were kind of interesting to me were steel. And what was the other one? Do you recall that I marked up? Well, let's take a look. What did I mark
solar.
up?
Solar.
Steel and solar. Let's just type that in. Yeah. No, it wasn't solar.
No, solar, I'm sorry.
Let's take a look. Let's just go to our price alerts and see what the most recent one was. Near the bottom, gold. It was gold and solar. And also PODD from Holly earlier. So GLD and SLX, gold and steel, stuff that you can drop on your foot and say, ouch, seems to have the best looking charts for the moment. And that's assuming we get cooperation from the general market after today with some red flags being raised. We'll have to wait and see tomorrow. All right, so I saw somebody had asked, if you have time, can you look at a chart? We can take a look at a couple charts here. MYOK and see what we see in MYOK. Well, I don't know if you're trying to fade it and go short, or if you're thinking about buying it, or you did buy it, but these are, these are pretty tough because we've got a giant gap up out of a giant range. I mean, I don't know what you do with this chart at this point, quite honestly. Depends on where you are positioned, or if you're thinking about getting positioned. Jumping in front of it to go short isn't jumping in front of a train. Don't necessarily know if I recommend that, even though that is a bona fide style that Andy and I know a couple traders will do. They'll sit and they'll wait for a bar reversal after something like that. But that's a rich man's game. You got to sit through a lot of pain to try and do that. So I'm not quite sure what to say about this one, other than obviously they had some wonderful news or earnings with a giant gap up in 2 straight days. I fully anticipate to start to see maybe some give back and some profit taking in a stock like that. Anybody else want to throw in two or three more charts? 3 more charts, and if you got one you're sitting on, we'll take a look at 3, and then we'll call that the session for the day. First Solar, first one in the box. Okay, First Solar. Let's go back a little bit. We can see why we got hung up here from prior congestion. Also, it'll help if you're thinking long or short too. But it looks like First Solar definitely got hung up into a lot of congestion going back there. In the more recent, I see a possible lower high developing, and I see a very juicy gap that may want to be filled, and it may want to be filled in the first 5 minutes of the open, just like I talk a lot about on the washout bounces that try and get the nasty, dirty stop runs on the open. So what I'm seeing is First Solar hit a ceiling, and be very aware that this gap could be filled.
And notice today what I always try to take a look at too. There was no strength today, even in the first 2 hours when you had a market just pretty much ramping straight up. If you look at the intraday on the solar stocks, there was just no strength at all. They basically opened up and traded down all day. So okay, that's always kind of a red flag to me. Like if I'm long something in a swing trading account, and like I look for relative strength and relative weakness. There were definitely some relative weakness this morning in the solar sector, as the market for the first 2 hours just pretty much went straight up.
All right, let's see. Well, again, you gave me a tough one. RL, which is, what is it, Ralph Lauren, obviously had some nice earnings, am I guessing? Yeah, yep, I think. I don't know what to do with a giant gap like that. If you're not already long, let's take a look at looking left. Some more upside, if there is anything left in there, could come up to these levels here at 92.09. But that could be a breakaway gap. It cleared these levels right here. Interestingly enough, you'll see it's lining right up. And so basically the sell-off that occurred a little bit this morning, you'll see bounced right off of prior resistance. So where the sellers were hanging out here, well, after today's surprise, price came back and bounced right off of the sellers. So prior resistance becomes current support. So therefore 84.35 is your pivot level in that one. Real quick, I'll take a look. Same thing in the other one. So both of those charts were very similar. From the same person asking. ACLS is a different person. Okay, we got what we like here, a possible nice washout bounce candle, filled the gaps over here. You can see last time what happened with a little bit of a washout bounce. We had a nice lift of 3 or 4 days, but we had a really nice day yesterday off of that washout bounce, but it looks like today, again, relative strength, didn't ever really participate along with the market and just kind of sold off. So I agree with the smart stop here that's being shown. I don't even have to come up with it. The bottom of that candle right there, very close to the bottom of this candle back here. The trade ideas smart logic is showing us that this level right here is probably going to be a level that you probably don't want to see it go below on the daily chart. And I'll stick by that as well on my own. The last one, CSIQ, another solar stock. Looking left, it's this is a tough one. I mean, it had a really nice day yesterday, and it may have wanted to follow through today, but it may have just gotten caught up in the general rancor of the market. And then again, going back to the TAN, it's kind of following the TAN. So I'd keep a close eye on this ETF as well, because it seems to be mirroring kind of what the same thing is going on across the board. If we have continued weakness in the TAN, yeah, again, you may want to use this smart logic right here as a possible stop, maybe a little bit more, because it could come down to the high end of that little wick right there. But really, guys, these are all charts independent of themselves, and they are subvertive to what's happening in the bigger picture. And the bigger picture was giving us a big giant middle finger today, a rejection wick, a rejection of new all-time highs, and we couldn't even close above the prior resistance level. So a lot of caution flags being thrown up in the Dow and in the S&P today. Watch this level, 220 for the most part in the DIA. If that gets breached tomorrow to the downside, we could see some follow through. All right.
Drake, if you have to use with an alert window, like a new high alert, okay, and you use your alert, if you click on the symbol, you will see the next area of support or resistance in the chart. So once again, it has to be maybe try your washout bounce there, although it's a 5-minute high. I don't know if it may have to be like a new high. Yeah, it works for mine. I don't know.
Somebody asked me today what I thought about these two. Wolf just looks like a Richter scale to me, or an EKG. Not really excited about that. It's sideways. And then Adobe, maybe a little better for Adobe because it's been in an uptrend, and you know, but Adobe's cried wolf a few times. So nothing gets me too excited about either one of these today. But the strategy is still very exciting for the most part. I think yesterday we back tested it again, and it's still showing some 3 to 4 day holds. For those that don't have it, I'll be happy to share. I said I would share my trend change lubricant too, didn't I? So let me do that. Let me share the washout bounce, because right now this is still my favorite swing trading alert. I'll drop that into the chat window. And then I'll also share the trend change lubricant, because I believe somebody asked about that earlier. Trend change, I'm just gonna call that TCL, abbreviated. And those are both in there now. And real quick, if you just click on that link inside of the chat window, takes you to this page right here. All you gotta do is just copy the code in the URL, which is the same code, which is in red down here. But once you've copied the URL, you're done with that page. Just go to File, Load from Cloud, and there it is already loaded down there. So if I click Load, I've got a duplicate copy now. And so that's the drill that you guys will go for if you decide to receive any of those cloud links that I just dropped in the chat window. And since we got maybe 1 minute left, just for funsies, let's just check on the back test here of a 3-day hold plus today, so a 4-day hold on all of the alerts that come out of the washout bounce, which is basically what the SDSs look like today, with a big long bottoming candle. But this one's been holding up okay. But now I will tell you, if the market does change, I mean, we've been in a market where the bidders keep jumping in and the afternoon buyers show up, and you know, we got a lot of bottoming tails. But if we enter into a sideways or even a slight bearish selling market, it's very possible that this strategy could start to deteriorate pretty quick. So as soon as we get to 100%, we're just going to check in on the strategy and make sure that this is the what's the longest you've seen a particular strategy work? Oh, geez, maybe a couple months, Joe? That's a good question. That's what's nice about Holly, is Holly can identify when they start to deteriorate. All right, so we're starting to get a little down chick. Yesterday, our profit factor was at 3, so some of the older trades are dropping off and some of the newer trades are coming in. We'll have to watch this a little bit and see if we continue to degrade at all, but still, you know, 105 trades over 64 days. That washout bounce that I shared with you guys is only averaging 1 or 2 trades a day. Yesterday we had 0, today we had 2, so that's pretty much right on par for where it should be. And I strive in my alerts to have them generate quality, not quantity. Again, going back to what we first talked about, whatever we can do to try and diminish the fire hose of data coming at us, and shrink it down to something more manageable and try and keep it simple is the way in which you navigate this crazy game, which is an art form, not a science. The top reversal, sure, might not be a bad idea for a top reversal. If we have some more ideas that come through, or some more selling that comes through, what the top reversal is doing is looking for stocks that took out yesterday's highs and then had no follow through and just dropped right back down into yesterday's range. It back tests best as a 45-minute or a 60-minute hold. It's basically just the stocks breathing intraday, and so it's more of it's a day trading scalp alert. So I'll type in top reversal here and just double check that I got my code, and then I'm going to hand it back to Scott, and we're going to call it a day. All right, so you got 3 scans in there. I hope to see a lot of you guys on Friday. Very well received. A lot more time for us to go over stuff and answer your questions specifically and spend time with you all. So 11 a.m. Eastern to 2 p.m. Eastern every Friday. Maybe we'll see some more of you guys there this week. So thanks for the comments coming through. We are at the top of the hour, and let's bring Scott back in.
All right, thank you. Just want to make sure everyone knows that Friday, this last one was great. Hedgefund, he had some interesting insight into the institutional side of things, so do check out that episode. Just search for Trade Ideas Podcast in your favorite podcast app and subscribe to it. Then you can get the most recent episode, any of the ones in the back catalog, and you'll get the next one when it comes out as soon as it's fresh off the presses. We have a code for you to save some money. Come on board with us using Future is Now, all caps like you see it on your screen, before the end of the month, and you can save 15% off your first month or year of Trade Ideas, either standard or premium. And remember that standard also includes a full hour of one-on-one training. You can grab a handout in your handouts panel. Just go to your GoToWebinar interface and expand the handouts panel. Download that. That'll have this card as well as some of the other ones. Any questions, email us info@trade-ideas.com. That goes directly to our help desk software and gets routed to the appropriate team member. If you have something directly for Steve or Andy, you can email them directly at steve@TradeIdeas or Andy@TradeIdeas. Today Trader is Steve Gomez's Twitter handle, so follow him on Twitter, and Trade Ideas One's Dan Merkins. And always good stuff there. Trade Ideas Pro is our handle on Facebook, so like our page, and then you get some new content that you can share with your friends. Thanks, everyone. We'll have the recording up later on tonight. Thank you, Steve. Thanks, Andy.
Yep. All righty.
Thanks, Scott.
Thanks, guys. Hopefully, maybe we'll see some of you on Friday. All right.